All right, so my next guest continues to carve a great name for himself on Wall Street with astute observations on the market and the economy. Joining me now, Kobeissi, letter editor-in-chief Adam Kobeissi. Adam, you've been talking housing a lot, so we got the market's falling apart. I got to get your thoughts on that, but you talked about housing thing, which I think is just so amazing. Because we've talked about this, rates, mortgage rates going up. I don't know, anyone 7-8% since 2000. The home payments at a record, rents at a record, existing home sales the lowest. I mean, is this a meltdown we're seeing in the housing market?
So it's a really unique situation right now because you still have 90% of borrowers are actually locked into rates below 5%. So most mortgages are way below where we're at, and that's why prices are going up while rates are going up because, well, existing home sales are at their lowest. Nobody wants to sell their house and lose on their mortgage and have their rate double or even triple.
Who's buying those? Are investors still buying? Wall Street foreigners or
actually, investment has come down a lot, over 40%. Investors are kind of leaving the market. So now I feel like it's just people that need their first home. They're kind of backing into whatever they can get, and as long as rates keep going up, I think that effect is going to keep amplifying.
All right, one of the big trends this year, one of the big stories is the money markets. It's just absolutely amazing how much money has gone into these money markets here at the fastest pace in a long time. For a while, a lot of guests are saying it's no big deal, but it is a big deal, particularly to small banks. I mean, but we haven't seen more bank failures. What's that all about?
Yeah, so that's been an interesting trend. We've seen almost $1 trillion go into money market funds since the Fed started raising rates in 2020. But the small banks, even though deposits are flowing out, they're kind of tapping into that bank term funding program that the Fed set up back in March during the regional bank crisis. And I think now, the new safety trade has become money market funds. It's not gold. It's not bonds. You can't buy bonds and treasury yields are skyrocketing. Gold, the dollar's too strong. Yields are too strong. Money market funds are the new safe haven trade.
You liked gold at one point, though, earlier in the year.
We did.
I always thought, what is the young kid doing with gold? Like, it's always the guys who are 85. You got to pick up some gold, Charlie.
We loved gold until it became apparent that the Fed's not going to start cutting rates for much longer than what people had expected before. Markets are not showing a rate cut now until next August, really, next July, into September even. It's hard to see with the U.S. dollar so strong. It's hard to see a case for gold to continue to rally. Actually, we're looking to get bearish on any bounces here. I'm
going to go before we get off the bank thing. Unrealized losses on these banks. The numbers are mind-boggling. I mean, just $600 billion, $700 billion. It's just mind-boggling losses. Held to maturity, obviously. I mean, so do you think the financial, is it over? I mean, or is it still hanging around?
It's tough to say. I mean, there could, bank failures usually come in groups, right? We've only had a couple really big ones. Do I think that we're going to have a 2008 event? Definitely not. I think this is a lot different. I think the Fed has also proven that they will step in. They will support regional banks, FDIC as well. And they don't want these banks to collapse. If it comes down to it, they're going to step in. So I think it is relatively contained. Could we see more collapses? Absolutely. It's at this point, it's hard to say what's going to happen over the next year.
And there have been some yellow flags like Citi stock, right? I mean, you kind of like, what's going on there?
Right. Keeps drifting
Let's
lower.
get a summary of your analysis. Okay, you're bearish on the S&P 500. How bearish?
So we have been calling for 4,200. We're almost there today. It's been a crazy move. And I think a natural correction, we're at about 8.5%, 9% down. We could see another 2-3% before we bounce. We're not calling for a huge crash. I think this is a natural correction. You're pricing in a longer Fed pause. The Fed pivot, quote unquote, has been pushed back. And I think right now that's what you see.
Do you buy into that then? Do you buy under 4,200?
I think the buying opportunity will come. I don't think yet. I think let price find a bottom, but maybe into the 4,000, 4,100 range, we'll start to see a bottom form.
All right, you're still bullish on West Texas Intermediate?
Absolutely. We love oil.
Around 90, it gets a little shaky.
I think we're going towards 100, and I think OPEC is going to make it clear this week that production cuts are here to stay.
All right, let's talk about bullish Treasury yields and bearish on bonds at TLT. I started the show with this TLT meltdown, which, by the way, goes back to 2020. It's not new. It's picking up steam. The volume last week was crazy. We had net sell its first time this year, but you think it's still going to continue?
Yeah, I mean, I think for the last 3-4 times I've been on the show, we've been saying TLT is lower. We lowered our target to 83 last week. Now we're at 85. The 10-year, I think, it hit our 4.5. It hit 4.75. Those were our two targets. We could probably see 5%, but also, I mean, be careful. This is becoming a very crowded trade, clearly. And I mean, nothing moves in a straight line.
I had Alpha on earlier. Alf Pecatelio from, he's really one of the best out there. Around, by the way, global guy, right? And he's saying it's time to start buying the TLT.
Yeah, I mean, it's becoming a very crowded trade. I think you still have to price in that long Fed pause and even another rate hike potentially. That's not even that important. It's more about how long we're pausing at this point. So TLT could bounce. I don't think that we're nearing a major bottom, though. I think a bounce could come, but I still think
tradable bounce, but nothing that, right. So you cool then? You feeling okay? Your declines are okay?
Yep. I think we're just in a natural correction. We could see another 5% downswing after the huge run we've had. I think it's possible, but I don't think this is a major crash. And the major leaders in the market, these big tech names, they're actually holding up pretty well.
They're holding up very, very well.
So the backbone of this market is alive.
Great stuff, Adam. Appreciate it.
Thanks.